Hi everyone, and welcome to Tuesday. And of course, every Tuesday we do a review on the NZSX50, being the main board for the New Zealand Stock Exchange. Just remember, this is for educational purposes only. No way is it intended to be personalised financial advice. If you're looking for that, then you do need to go and have a chat to your own financial advisor. Let's take a look. So I have got the graph up here for the main board for the New Zealand Stock Exchange, being the NZSX50. Now, if we take a look here, last week, unfortunately, was a down week. So that means we've had 3 weeks in a row for the New Zealand market to have fallen. It's nothing significant. Like if I put my little cursor on there, the volume was just under 35 million. So it's not a lot of volume. The thing is we do need to be seeing our market continuing up in order for there to be new buying opportunities. And the other thing that we need is more participation from more of our whole board than just sort of half a dozen or so shares, which is what we're not seeing. And this is quite disappointing for our market. But there is a lot of commentary around it at the moment that there's been no new listings, a lot of delistings. And that is so true, because we need to be having these new companies coming on and listing on our stock exchange to create obviously more interest, more buying power, more growth. And if that's not happening, this is what we end up seeing. And obviously with the advent of different trading platforms, we can trade any market anywhere around the world. And also with 24-hour trading now, especially in the US, you can be trading US stocks 24 hours a day. So it's got a lot easier. The thing is that I believe, definitely do your research, have yourself a predetermined set of rules before just jumping blindly into shares because you want to obviously be a share trader or share investor. Love it that you want to do it, but obviously set yourself up some rules. Let's take a look and see what's actually happening here. Let's put our moving averages on. Change that to 30, exponential. So the market's still trading above the 30-week exponential moving average. That is a good sign. We'll also put on the 15, and as you can see, the market's trading above both of those, which is good. It's what we want to see. However, we do need to see some more green candles than red ones. Let's pop over to the 1-year chart, simply because this brings these candles into dailies, which is what we want. And again, if I zoom in there, the market is only just above both of those moving averages, being the 15 and 30-day. We want to see a little bit more of a clear sort of divergence away from that, which is not what we're seeing at the moment. The biggest sell-off was actually last Friday. So it's interesting that most of the trading days last week were positive. But what's actually happened is if I take these moving averages off and let's zoom in. So you can see here where I've got the dotted line. That was Wednesday last week. That was a positive day. Obviously, the market closed higher than where it opened. But if you look at the top, there's quite a wick going on that candle. Now, the interesting thing is we've got a gap forming between where the market closed on Friday and where it opened on Thursday. Now, it never really did anything. It just went sideways, but there was a gap down, which says that there were a lot of sellers in the market. And that is what causes the gaps, where there is a lot of trading, a lot of orders have been put into the market after hours, so outside of trading hours, and it can cause these gaps. Now, a gap to the downside like this one is a very negative sign. Even though it ended up being a green candle for that day, so in other words, it closed slightly higher than where it opened, it's still got that gap down. So that is something that I definitely don't like to see. Then if we go through and we look at Friday, again, the market closed a bit higher, but we've got that wick at the top. So it's indicating again that the sellers are actually in control. These are signs potentially of warning. And this is why, for me, it's all about using stop losses, having a set of rules as to when you're going to enter into a market or not. That was something that I really wanted to show you with our market. So if I just go back onto the 5-year, the 5-year being a weekly, it's not showing as much volatility and it doesn't show it as quickly as the dailies. For me, I like to look at the dailies just to confirm, but I do the bulk of my research on a weekly basis because I want to invest for a longer term. I'm not into just quickly doing quick buys and sells on the market. I want it to be a little bit longer term, and that's why I tend to use the weekly. But I just like to go and have a look at that daily candles just to see if there's perhaps something happening there that I'm not aware of. So I really hope that's helped. I'll just stop sharing. On Thursday, I am taking a look at the Smart Invest share called Bitcoin. It's an ETF, obviously investing into Bitcoin, but it's listed on the New Zealand market. So you might be interested in that one. I've covered off stop losses on that one. So that's certainly something that you might want to take note of. But just remember, if there is any shares that you'd like me to review, it doesn't have to be on the New Zealand market. We can certainly use Yahoo Finance, take a look at that. Or if there's any questions that you would like to know about share markets or share trading or anything, do reach out. Love to help. Happy to do a video on them. So take care, and we'll see you again on Thursday.